Hello, everybody, and thank you for joining us today on our monthly webinar. Today, we do have a guest speaker with us. It is Michael Scott, CEO and founder of Cannapreneur Partners, and we'll be discussing investing in cannabis with your self-directed IRA today. This is something we must speak about in all our presentations. The Entrust Group does not provide any investment advice or endorse any products. All information and materials are strictly for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. A little bit about Entrust, of who we are and what we do. We are a self-directed IRA administrator, record keeper, and custodian. We have been in business for nearly 40 years with 22,000 plus accounts and a little over 3.3 billion in investor assets. All Entrust clients do get a single point of contact, and this is a differentiator for us in the space. Our clients will not need to call into call centers and speak with somebody else. There are 4 business development managers throughout the country assigned to each territory, and depending on your location, you will be assigned to one of those business development managers. Entrust is the premier leader in education. We have a knowledgeable staff, with most of our staff does hold the Certified IRA Service Professional designation. We do have nationwide offices with a corporate headquarters in Oakland, California, offices in Nashville, Tennessee, Hackensack, New Jersey, and Southern California. We do offer a national continuing education program for all realtors, CPAs, and certified financial planners. We host national and local in-person events and webinars such as today. And we also hold an annual IRA Academy, where we are the only ones that hold such academy. We train other companies in our industry and our competitors to pass the Certified IRA Service Professional exam. This year's IRA Academy will be held in Nashville, Tennessee from September 14th to September 17th. If you would like more information on the IRA Academy, please type your questions in at the end of the webinar. We'll be happy to address that for you. First, we'll cover what a self-directed IRA is. A self-directed IRA is a traditional Roth, SEP, or simple IRA that simply allows the IRA holder to hold a broader array of investments, such as limited partnerships, real estate, or the cannabis industry. The IRS allows IRAs to hold these types of investments as long as they are held at a custodian willing to custody them, and Entrust is that custodian. We are regulated by the same Internal Revenue Code that your normal traditional IRAs through Fidelity or Charles Schwab as such would have to follow. We provide administration and custody of investments. We do not sell or offer or endorse any specific investment. Having a self-directed IRA allows for greater asset diversification opportunities beyond your traditional stocks, bonds, and mutual funds, which you would invest in your normal IRAs with Fidelity or Schwab or custodians as such. Big differentiator is due diligence is the account holder's responsibility. Since Entrust is simply the administrator and we do not offer or sell any advice, all due diligence is the responsibility of the account holder. Some of the benefits of using a self-directed IRA. You can take control of your retirement. You make your own investment choices. You can invest in many different types of assets, such as cannabis as we're speaking today, real estate, limited partnerships, startup companies. You can lend money. Invest in what you know and what you understand. Your annual contributions may be tax deductible, and your IRA growth can be tax deferred or tax-free, depending on the type of IRA that you hold. For now, I will pass it over to Michael Scott, CEO and founder of Cannapreneur Partners, to speak more on investing in cannabis.
Hey, Tony, thanks so much for handing it off to us. Everybody that's on the webinar, I am looking forward to going through the exciting world of cannabis investing. Before I do get started, just 2 quick things. Number one, I just have to share a nice plug to the Entrust Group. I've worked with different self-directed IRA custodians in the past. both, personally and through my business. And I just had nothing but a first-class experience with the Entrust Group. In fact, I've got some of my own personal dollars just settled into their IRA that's getting invested in some cannabis deals now. So great endorsement to the Entrust Group. Also, Todd and my team will be helping speak and going through some of the seminar deck. Todd has got great industry experience from his background with his online investing community value plays, and has more recently, expanded his role with Cannapreneur Partners. So I'm going to go through the presentation. We do have a question and answer portion at the end. Feel free to ask any questions that you might have. We absolutely, very open and very transparent team overall. So let me just get this clicked over to the next slide. All right, so the overview. So we're going to talk about the cannabis industry. We're going to talk about how it's really poised for explosive growth. Many of you out there have probably seen the constant headlines of how the cannabis industry has been evolving from both an adult use, a medical use, and just overall in terms of the impact it's making in society. We'll talk about why now versus later. There's a lot of people out there that believe that the time is after federal legalization, and we'll talk about why we believe that's actually false, and the proper time is to get in before the lift of federal legalization. We'll talk about the different types of private investments, some that are more diversified in structure and nature, and some that are non-diversified. We'll also share our thesis on why and what are the unique choke points of the cannabis industry, and how we've designed our investment thesis and our business model in Cannapreneur Partners to capture and maximize those choke points. And then we'll talk about, what is the potential? What is the upside? And we'll actually use a case study of one of our very first investments in the cannabis industry. So Todd's going to pick it up from here and talk about some pretty wild statistics within the cannabis industry.
So right now, there's a lot of polls out there on cannabis, and roughly 95 to 98% of Americans favor medical cannabis in some form, and roughly all over 2/3 favor the recreational marijuana. So when you blend the two together based on the polls, it comes out to about 91% of Americans want marijuana legalized in some form. It's a $10 billion of investment to date in the industry, and that number is growing 20 to 30% annually. And ironically, the largest demographic, the largest purchasing demographic in the U.S. right now is millennials. They've overtaken the baby boomers, and they are the highest demographic as far as cannabis use. And they spend more on cannabis than they do on groceries on a monthly basis. We are focused primarily in the Massachusetts market, in the simple demographics for us. Right now in the Northeast, there are 33 recreational dispensaries open. They are all in the state of Massachusetts, and they service Maine, New Hampshire, Vermont, Rhode Island, Connecticut, and New York State. We actually have customers from northern New Jersey come up and purchase cannabis. That works out to roughly one dispensary for every 212,000 people. That's just in the state of Massachusetts. If we expand that to the region, it's over 1 million people per dispensary, and that dwarfs the rest of the nation as far as penetration into the market. And not only that, but Massachusetts has the largest user rate in the country, with 21% of adults admitting they consumed in the past month. Colorado is number 2 at 15.5%. And you can notice that the differences there just in the number of dispensaries and the number of people surrounding them. So cannabis, not only is it a nice financial investment right now, it's also a disruptor, and it's disrupting various industries. Cannabis and its cousin hemp are being used for construction materials. The medical and pharmaceutical aspects of cannabis, we've only just begun to touch, and there is a vast market available for there. There's a lot of evidence coming out now that marijuana has been legalized on the medical side and on the recreational side. A lot of the past myths surrounding it are being crushed. For instance, it's a gateway drug and items like that. Far from being a gateway drug to opioids and other type of addictive medication, what the evidence is showing us is that when you legalize cannabis in your state, both medically and recreationally, there are some immediate impacts. Number one is opioid overdoses fall roughly 20%. Synthetic opioid overdoses, which are your heroin, your cocaine, your methamphetamine, they fall by almost a third. And these are almost immediate results. So if you want to use the analogy that cannabis is a gateway drug, this is in fact a gateway drug off prescription medication, off heroin, off cocaine, and off these dangerous substances that you can overdose on. We also find out when we legalize cannabis that drunk driving arrests fall, alcohol sales fall, alcohol-related crimes fall. We're talking domestic disturbances, bar fights in colleges and stuff like that. So there's a lot of societal benefits of cannabis that we're only just recognizing right now, and that is a section of this industry that we believe is going to be far in excess of a simple dispensary operation, and that's coming down the road as more studies come out, as we get more factual evidence, that's going to grow.
Todd, those are great points, and I will tell you, as it relates to your comments about it being a gateway drug, there are now experts, I'm talking, experts linked to big names like Harvard, McLean's, et cetera. They're doing presentations that actually talk about how cannabis is proving to be a highly effective exit-way drug because essentially it's being so successfully utilized to get people off of these harder drugs. In fact, Todd and I gave a very similar presentation of this at the Money Show a couple weeks ago in Florida. And what I'll tell you is I asked the question of the audience. I said, how many of you in the room, either yourselves directly or know at least one person that has benefited from cannabis in some way, shape, or form? And at least 2/3 of the room, hands went up. And what I will tell you is, how many times has there been since the inception of the stock market, if you really think about this, where there has been investor demand for something that's so pent up that despite that it's federally illegal, people are still building the stores, investing in them, purchasing the product. That is because people are seeing the benefits from the ground up. And I will tell you that is a big part of my investment thesis, where we believe that cannabis, once this hits the public markets in the U.S., that there's going to be an absolute boom, just like we saw in the Canadian markets. So we think that it's a pretty compelling industry, and one that's it'd be a mistake to not look at over the next 5 to 10 years.
Right now, you have major brands getting into cannabis in various ways. You have the purchase of Constellation Brands, Canopy Growth. You have other major investment by other alcohol and tobacco companies into the cannabis space, because what they're also seeing is that as people use cannabis, tobacco use is falling, which tobacco causes cancer. And there's actually no evidence that cannabis smoking causes cancer, because there's no artificial toxic ingredients added to cannabis when it's smoked like is added to tobacco. CVS and Bank of America are getting involved in CBD on a heavily basis, and the other pharmaceutical companies. Estee Lauder is using cannabis-based items in makeup and in skincare. And Scotch Miracle-Gro right now, the fastest growing segment of their company is some of the feeding products that they make for cannabis. So we view these large investments, billion-dollar investments by these companies, as more proof that the cannabis space is here to stay and going to grow even faster in the future.
All right, so the different types of offerings there are out there. So number one, there's single offerings, and there's diversified offerings, and I just want to talk about the difference. The vast majority of what you're going to see out there are typically going to be single offering investments. And now let me define what that is. So keep in mind, private investments are very different than publicly traded, right? In the publicly traded world, you can go online, you can read what the analyst reports say, you can get a lot of opinions really fast, with the ease of Google searching, clicking a mouse, etc. In the private space, it's different, right? You are your own due diligence. You've got to dig in there, and whether you're trusting a team like ours to help you vet these businesses and these investment opportunities, or you're doing it on your own, it's very important to understand that you still got to get important information, and you still have to make good decisions on that information, no different than publicly traded investments. So a couple key things to think about. when you're dealing with a private company that's not on any public exchanges, especially if they're pre-revenue, early stage, founders of those companies, CEOs, etc., they're very focused on landing investment capital because that's the first start of the lifeline of a business. Assemble a team and get enough money so that you can actually make money in the business. And so keep in mind, the founders are it's their job to pull together an amazing pitch, amazing presentation, show you the compelling investment opportunity at all costs. Because if they don't land your investment dollars, guess what? That's their first and highest likelihood of going bankrupt. The vast majority of not just cannabis businesses, but startups globally, that's where they're going to die. Is actually, believe it or not, most of them will not raise the amount of money that they need to get launched. And I will echo that that's about 10 times worse in the space of cannabis. So let me explain what that means. It means you've got to be even more selective, and you have to put yourself in a position where you have really good deal flow so that you can pick the best of the best with cannabis. Now, a single private offering, again, keep in mind, it's not a diversified play. You're making a bet on that individual team in the overall cannabis space. So this is an example on the screen of a single private offering with cannabis. So basically, this is an example of a $2 million raise. They're basically showing a $10 million valuation. When it's pre-money, those are pre-money valuations. So let me explain the difference. It's not the same thing as publicly traded, where you can just multiply the number of shareholders and the stock price and get a valuation of a company, right? A publicly traded company is based on actual cash that's generated, number of shareholders, outstanding shares, etc. In a private that's pre-revenue, you need to look at the valuation as differently. That's really, it's a hope. It's really a desire that they're going to build the business to that value. And in order for you as the investor to earn a percentage, even a penny of return, they've got to get through that valuation. So here's how you look at and look at the price of a business. You've got to look at it as, okay, if there's $2 million of investment dollars available, number one, that's a unique thing compared to the public markets. You don't typically have to worry about getting shut out of your typical mutual funds or your stock investments. In a private investment, the hottest ones, the best private investments, they're going to end up being oversubscribed, right? So what that means is the best deals, the money and the shares move. So that means you want to get the shares before they're gone. However, which creates a bit of a high-risk scenario, right? You might have a 2-week or a 4-week window to make your decision, which means you've got to dissect the right data so that you can make the best decisions possible. So in a raise like this, imagine you're putting in 100 or 500,000 of a $2 million raise. In order for your 100,000 to 5x, so to speak, turn into 500,000, in order for that to happen, that business has got to go up in value, right? So basically, if you wanted to see a 5x return, assuming there wasn't any other dilution, that $10 million business actually has got to get to $50 million for your 100,000 to turn into 5. So you want to weigh the risks, and what I call, identifying is the juice worth the squeeze, so to speak, right? So if you're going to take high risk dollars with your investment portfolio, and by the way, investors should have a certain percentage, even if you're a conservative investor, it just means a smaller percentage of your portfolio in more opportunistic type investments. And so if you place these dollars in, you're banking on the fact that you're going to see growth. And in the cannabis industry, seeing 3x, 5x, 10x, those are the types of returns that are absolutely possible. When you look at the financial projections, especially in this industry, I'm going to tell you the numbers almost look too good to be true. And here's what I'm going to tell you. For a lot of the businesses out there, it is too good to be true, because you've got to be in a position where you're picking the top 10%. And I can tell you it's more like the top 1 to 5% for you to really make the multiples of investments. So doing due diligence in this space is absolutely critical. Non-diversified, again, is the example here. Classic example of founder raising money, and this one would be a specific high-risk bet because it's technology inside an already high-risk cannabis sector. So a diversified offering, this would be like one of the offerings that we've got available now for our own company that's almost closing. So this is an example of back when we had about $1.2 million of shares left. I think we're about 500,000 or less now. And what this is an example of is how our business will go out there and continue to make reoccurring investments, diversify that play with investor dollars out there. So think of mutual funds that are buying not just one stock or one sector, but they're diversifying it, right? So that's kind of the play the Cannapreneur Partners would be for an investor looking to get into the space. So a diversified play is something that maybe you're looking for professional management or guidance. Maybe you're looking for ongoing deal flow. Those would be examples of why you want a diversified play. Or you don't want to be responsible for all the due diligence for every company, and you just like the idea of another company picking them and then bringing them to you, and then you get to make the final decision in terms of the flows. So this is a classic example of a diversified play, one that we plan on executing on that would have a diversity of dispensaries, in terms of dispensaries, adult use, medical, extraction-based businesses, debt lending, etc., is an example of more of a diversified play in the marketplace. What do we see as the choke points for the industry? So I think that's an important thing to spend some time dissecting. And I'll tell you why. In our world, where you don't have as much of the readily available public information as it relates directly to investing, what you've got to do is you've got to kind of go out there, study an industry, and understand what are its unique choke points, especially when it's a new emerging industry. That's where there's going to be hot emerging private investment opportunities. Any new emerging industry is going to have the majority of the hottest investments in the private sector before it reaches public, right? And that's just kind of basic common sense, because if it's A, new, it's B, emerging, then if it's not in the public space yet, they all start typically on the private sector before they go public. So we've done that. We've done the road work, studied the industry, and we see two core choke points to this industry. Number one, this industry has a screaming desire for capital. There is a tremendous lack of capital for these businesses that are looking to get started. Why is that? In any normal industry, if you're looking to launch a business, whatever that may be, a retail store, a gym, etc., if you want to go out there and leverage an SBA loan, you can do that. You can apply for an SBA loan, hit their criteria, or a traditional bank loan, VC, private equity. All these traditional channels to land capital are out there. In addition to these channels, there's also the good old-fashioned fundraise approach. Go out there and raise your own dollars. I can tell you, outside the cannabis industry, that's much easier to do. Why? Because there's no over-looming doom and gloom of a federally illegal law that says, hey, you shouldn't be investing in this because of the current federal status. Those challenges have created a huge choke point to this industry. Talk to anybody that is in the industry looking to get launched, and what you will quickly discover is there is a screaming desire for capital to get these businesses launched. So number one, this is how we partner with investors like you. And what we kind of candidly say is working with the investors, specifically the mass affluent or the smaller investors, we think is really our secret weapon in our business model, our business strategy. Because A, investors like you can do due diligence with a team like us, and then we place that capital in very hot emerging sectors. We get to capitalize on some of that return on investment. You get to capitalize on the return on investment. So there's a win-win between us and the investor. And then the third win is, of course, the operator that really desperately needed that capital. So that's part of why we built Cannapreneur Partners, is we saw on the East Coast especially, early on, 3 years ago, we saw this emerging opportunity coming up in the marketplace, and we wanted to be one of the first to market to fill it. Number two, we see, because of the lack of just basic business knowledge, it's a new, nascent, budding industry. And so what you have is just a lack of experience. So that's the other gap that this industry really struggles with. And if you followed any of the publicly traded Canadian company stocks that went through a crazy boom, a year ago this fall, but then over the spring and this past fall really went through an insane correction, it really is proof in the pudding that a lot of these public businesses even really struggled with basic business decision-making skills in terms of executional excellence and producing cash flow. So that's another void that we fill as Cannapreneur Partner Team. Is what we do is we work with these businesses to help them to be successful. So our advice to investors is, if number one, you can find these all-stars, number two, know that a lot of these businesses, unless you're dealing with a team that's got seasoned experience from other industries, and in the new emerging markets, sometimes it takes a while for those players to get to the scene. Just know that sometimes a lot of these investments need more than just capital. They actually need guidance from seasoned business people and entrepreneurs that have got a proven track record of success. So what's our solutions to this? Number one, we've developed an amazing fundraise strategy that basically encapsulates doing seminars, getting education out there like this. So number one, approach, where do we live our investment dollars deploy into these startups? We've got a deal flow pipeline that's pretty significant. We basically host networking mixers and pitch dinners on a pretty regular basis here in New England. So we've essentially created kind of a Shark Tank for cannabis style culture with our events that we've done. So we've got an amazing deal flow pipeline. Industry experience-wise, we've now been doing this for over 3 years here on the East Coast, which pretty easily puts us as a market leader. There are just not many players out there. Sorry, I just got notification audio was a little light there, so sorry about that. Hopefully that helps. But what I was saying is industry experience. That's another thing to just be on the lookout for and be cautious as an investor. There's only so much industry experience out here. That's part of, especially if you're looking at investing in new seasoned teams on the East Coast. What I will share is that there isn't a lot of experience. So you want, ideally, when you can, find the teams that have the experience. It's few and far between. Sometimes you can get lucky and find transports from the Colorado or the California marketplace that's transferred over to a new and developing emerging market. Like I said, we've got 3 years of experience out here, and the 3 years of experience we have out here outweighs quite a bit. There's a funny saying in the industry that is like every 1 year is like 7 dog years in the industry. And I think that's especially true on the East Coast because there's just so few experienced cannabis entrepreneurs. So in addition to the investor events that we do, we've also aligned ourselves with some really core strategic partners, right? So I encourage investors, if those of you that are on the line that are looking to do more strategic private investments, is if you're not going to work with a team like us, what I would recommend is build your pipeline of expertise around the gaps that you may not know. So an example would be, for us, if we come across a tech deal in cannabis, it's very important to be smart enough to know what you don't know. And so what we do is we've built a team of experts around us to help fill some of those voids. Some examples would be, we brought some very, very seasoned leadership and finance experience with Doug Lennox and Chuck Walkendorfer from their team. Doug was essentially in the role that's essentially former president to Ameriprise Financial. And then we also brought on people like Richard Wilson from the Family Office Club that understands kind of the target demographic of what investors, especially the larger, more strategic investors, are looking for. All right, moving along to the next slide. So in private investing, Private investing, as I mentioned in the beginning, it's very important to know you're the due diligence. So these are some key areas that we recommend that you dig into from a due diligence perspective. In addition, I've got an ebook that's going to be coming out in the next few weeks. And that ebook is actually all about how to find and how to vet properly these different types of private cannabis investments that are coming up. So if you're interested in a copy of that, just shoot us an email or reach out to us. We're happy to talk to you about this. Now, one thing that's key is, again, so I'm going to go through the key areas for you to hone in on. If you're going to invest in privates, I really, really stress invest the time and energy to properly vet these deals because it's a high-risk space in cannabis especially. Alternatively, if you're looking for a team like ours, we're happy to work with you to help vet these deals. But these are the things I'd really recommend you look into. Number one, we're big on vetting the track record of success and specifically as it relates to emotional intelligence. I find our competitors, one of the areas that a lot of times they will miss is measuring emotional intelligence in not just the founder or the CEO, but the executive teams. So let me explain. Emotional intelligence has been proven to be one of the bigger predictors of future success, right? So it used to be that I would just dig into track records of success, but I decided to go, in this industry, you'll kind of develop your vetting meter pretty fast. And one of the things that I've realized is if I went a level deeper and looking into someone's track record of success and actually look into and dig into what were the trials and tribulations along the way with each benchmark and each success point in their lifetime, what we're able to do is really understand, did they have the emotional intelligence? B, did they grow even a more emotional intelligence along the way? And it helps us measure for the benchmark and the journey that they're about to go down as a startup organization. Do they have what it takes to actually be successful? Number two, we always want to confirm the market or the business strategy that they're bringing to market. Is there a market for it? B, do they have an effective way to monetize and generate revenue from that market? Is the juice worth the squeeze? So I cannot express enough. Investors will sometimes look at an investment and just try to kind of quantify, is this business going to be successful or not? Will this team make it or not? You really don't want to just stop there. What you want to do is you want to know that A, this team is going to make it, but B, this team is going to be that top 1%er that's going to blow through the walls to be very, very successful, because you're looking for multiples in the cannabis private investor sector. So you got to ask yourself, if I'm going to jump into cannabis, which is a higher risk sector, or if I'm going to jump into private investments, which just private investments overall is higher risk, is the juice worth the squeeze? So actually measuring, okay, what is my upside? Because I know my downside, there's high risk in the sector. So you've got to ask yourself, am I looking for the risk I'm taking, is a 2x enough? Is a 5x enough? Right? So that's an important thing to vet in these deals. Integrity and achievement orientation are critical in looking at these executive teams, right? Because keep in mind, if you're not vetting for integrity, then you're missing out on a big, big, big component. If you just assume you can believe every single thing these businesses are pitching you, that would be a very, very false assumption and a path to losing a lot of money in this industry. Once again, I just will remind you, these founders, they're up against a wall when they're in a fundraise, especially in the cannabis industry. A, it's extremely difficult. B, if they don't land that next investment dollar, their business could go bankrupt and they would have to lay off their team. So keep in mind, these businesses, a lot of times, a lot of operators and leaders, they're going to tell you whatever they got to tell you to try to get your dollars. It's your job to separate what's real from the BS out there. And that's not always easy to do. There's a lot of slick sales guys that put together great pitch decks. Your job is to verify, can they walk the walk and not just talk the talk? We also always do background checks with not just investors, but also the operators. We will not sink dollars into a business without doing thorough background checks on the key players in the team. And our vetting process is pretty detailed. We're going to get the background check. We're not afraid to ask for IRS transcripts to kind of confirm a track record of success, or are they being chased financially with the IRS for backup of holdings. We have a very, very thorough background check, background and vetting step process just before dollars are sunk in. And then the other thing is, does this group have a what I would call a plan B approach in cannabis? I think this is less needed in other industries, but one of the nuances of this industry is this is easily one of the most regulated and the most uncertain industries there is out there, right? So when there is a lot of uncertainty, right? When there's a lot of uncertainty, what I will tell you, it creates a lot of chaos. And so these businesses, in some cases, will need to have a pivot approach, because if they thought they were going to be able to open their store cultivation in June, in some cases, that's not happening for 10 to 12 months later because of regulatory delays. And so what you've got to think about is, if you're investing in a team that is not as focused at figuring out a way to survive, a lot of times those delays, it's the death nail for these businesses, because if they didn't have built into their financials, 6 months worth of extra cash reserves that they didn't plan on, those businesses are the ones that typically go under, or they sell at a fire sale. Okay, let's just get us to the slide here. So example of different types of cannabis investments in the industry. So overall, the different types of investments in the industry is, we've got debt lending. We view debt lending as a lower risk spectrum. Not all cannabis privates are created alike. So debt lending would be an example where we think you can get lower risk but equity-like returns. Especially here on the East Coast, 15 to 23% interest on lending debt is very, very common. So you're getting very healthy equity returns for debt-like security, and the security can be structured in a way that's relatively low risk, meaning we can structure ownership of the actual dispensary location, the transferring of the license, the business enterprise, and the equity ownership itself. Lots of ways to structure safe debt. A little higher up on the risk spectrum is, I would tell you, cannabis, businesses as a landlord, owning the real estate, because if the cannabis business goes through uncertain regulatory issues or closes down, you can always use that as a landlord for another type of business. And then the risk spectrum goes up. We think the sweet spot, right kind of in the middle, where you're getting high reward with lower risk, is the cannabis dispensaries, both on the medical use and the retail adult use side of the spectrum. We think it's among the lowest risk, highest yield sectors. In states like Massachusetts, you can deploy $1.5 million within the first year or two of that dispensary being running, operational. That business goes from $1.5 million capex to get started to an enterprise value of 10 to 20 million, and that's on the low end of averages for the states like Massachusetts. That's explosive return for investors that get in on the early stages of these dispensaries. Okay, so here's an example of kind of our story getting into the space. We thought this would be a good example to go through with investors, given the fact that, let me just go back here. Given the fact that it's an industry that creates some fear, given kind of where it is, but also has intrigue in terms of the upside industry, right? So the background of this story, actually, let me just do a quick time check. We have 20 minutes, is that right? 10 minutes, okay. So I'm just going to move through this so that we can make sure we have time for questions. And I highly encourage any questions out there. But let me jump into this. My cannabis journey started in 2016. So at the time, I had 7 or 8 businesses in play. I had leaders in place in the various businesses. I decided to take a sabbatical. I took some time off. And what I did was I was studying what's going to be the most explosive industry, because I wanted to enter into a new industry where the wind would be in my sails. And I spent time studying billionaires that had built themselves from the ground up. And as I did that, what I did was I uncovered that what the billionaires were doing wasn't rocket science. They had an amazing ability to leverage entrepreneurism, people, and capital. And what they would do is create verticals and almost unfair advantages in terms of their business modeling. And then I studied and learned what was to be the most, in my opinion, the most explosive cannabis, one of the most explosive industries and investment opportunities we will see in our lifetime. And that's this industry. And by the end of the year, I had a desire to mix those two learnings. And something happened in December of that year where basically in December of that year, I saw my mother go through a horrible PTSD episode. My brothers and I witnessed one of the worst ones we'd ever seen. And long story short, she quit breathing for about a minute and a half, went catatonic. And when she came to, and we brought her to my house, we couldn't get her, snap her out of this rhythm. And for people that understand PTSD, at its scariest level, you have to really worry about suicide. And so one of my brothers said to me, why don't we try cannabis? We hear how it's saving, all these lives with ex-deployed military. So I did it, and I will tell you without exaggeration, it took less than 5 minutes. She went from someone that couldn't regulate her emotions, her breathing, was in tears, to not just baseline, but uplifted, and then she was dancing around in my house about an hour later. And there's no exaggeration to that story. And I have heard so many other stories anecdotally. And that's why I'm absolutely convinced this is an industry that's not going anywhere. There's too many people out there in the world like me that have experienced amazing benefits, either firsthand or through loved ones. And so it was that moment that I could see where my purpose was connected to this industry, and I saw the path to making an impact. And so I jumped in the industry 2 feet in, and I said, you know what? I've got capital I'm looking to deploy. In addition to capital I'm looking to deploy, I also, wanted to bring some of my business knowledge and my business strategy to the table. So by 2017, my first 6 months of the year, it took me a while, but I found my all-stars. The all-stars basically had a 3-page pitch deck. They had some ideas on what they wanted to build. They hadn't really secured anything yet. They needed to raise the money to actually buy the property. They'd secured some sites. I was the riskiest investor in. This is now Q2 of 2017. $500,000 is invested. They asked for $8.5 million raise. We ended up raising over $30+ million with the teams. And what I'll tell you is the business, we went from just the original idea to building one of the most state-of-the-art cultivations that encompasses a wholesale business and retail in the medical and adult use space. The business then started getting 9-figure offers from some of the biggest cannabis businesses in the country. And that was pre-revenue, believe it or not. And then, believe it or not, we ended up walking away from some of those 9-figure offers because we were months away from actually opening our doors and starting revenue. And so that's exactly what we ended up doing. So we launched our first store. Week by week, the store has eclipsed its prior week in sales. We continue to get offers in the 9-figure range. So the industry has absolutely compelling opportunities. And I can share with you numerous offerings that I've seen in the place where businesses have actually been rewarded, believe it or not, even if they've gone out of business, by selling just their licensing in the zones that they've secured. In some cases, I've seen for ranges for $5 to $18 million. So what we're now entering into the Q&A portion, and I want to turn this over to Todd Sullivan, who's really our lead investor and has been the largest investor in Cannapreneur Partners itself. And I'm going to turn this over to Todd, and we're also going to open up to Q&A here in a little bit, and we're going to give you guys an opportunity to fill out a Mente survey so you can give us feedback, and you can also engage in any of our services or Entrust services should you like. So I'm going to turn this over to Todd.
Thank you, Mike. So I spent most of my professional life looking for market dislocations in whatever market I'm looking at and trying to find ways to capitalize on them, whether it was the housing crisis in 2008, 2009, the recovery since then, and where I see things now headed in. And as I looked around the cannabis space a couple years ago, as I gained more knowledge about the medical benefits of it, the market potential, and the overall demand for consumers for this product, I became convinced that cannabis was going to be the next big investment for several years, much like the internet was back in 98, 99, and 2000. But when I looked around the market, I always saw those Canadian companies that were basically roll-ups, which were running around spending shareholder money as fast as they could, paying anything they could pay for these dispensaries and grow operations in various states. And we've seen that story in the past, and it's always a bad idea. There's always a reckoning, and there's always large-scale bankruptcies and things like that in the public markets. And we've seen that over the last year and a half, whereas the price of almost every publicly traded cannabis company has collapsed. And I have not and do not own any publicly traded shares of any plant-touching cannabis company for that very reason. The flip side of that whole equation, though, is those people who owned those dispensaries and owned those grow facilities in the various states were making investments in these businesses and selling to these larger operators at incredible multiples. And I want to be part of that equation, right? I don't want to be buying a premium someone. I want to be selling it to somebody. So as I looked around about 8 months ago now, I came across Mike and his group, and we began having conversations. And as we went through the math in the Northeast and the basic market here, I became very convinced that Cannapreneur was onto something. They are one of the, if not the only entity in the Northeast doing this the way they're doing it. And I wanted to be involved. And so why do it now versus why wait till the federal ban lifts? Right now, the single biggest problem any cannabis entrepreneur has is getting money. They cannot get a loan from the bank because of the federal ban. They cannot go to private equity. They have to go to individual lenders like ourselves. And I'll just do some simple math for you, and it plays out all over the place in Massachusetts. The average Massachusetts dispensary will do about $15 to $20 million a year in sales. We, as a group, can invest $1 to $1.5 million to open a dispensary, and we open it with a entrepreneur who wants to run it, and we'll capture for that $1 to $1.5 million about 40% of that business. And that business in a year to 14 months, when it's on a $15 to $20 million run rate, would be worth about $20 to $25 million. And that's the simple math right now. And it's not going away anytime soon. But what will happen when the federal ban lifts? What happens then? Well, then you have debt-fueled people. You have private equity, which has been chomping to get in the space for a while, and they'll come surging into the market, and they'll want to buy because they don't want to start anything from scratch, right? Private equity never builds anything. They walk in and they buy it. They're going to want to buy our little dispensaries that are worth $20 to $25 million now, but when there's all this money chasing them, will be worth 25 to 30 to 35 million. So that's the basic investment thesis. So I decided to take a large stake in Cannapreneur because I wanted a diversified play. I wanted to have a piece of every deal that they did. And I think that this, for the next 4 to 10 years, I don't think there are going to be many investment places that outdo the cannabis space. And for the reasons I said earlier, we've only touched the potential of this plant and what it can do for people. And as that becomes more realized, the investment thesis will play out even more, and there's going to be more investment opportunities that come from all that. So I'll pass it back to Mike, and then we can take some questions, and we'll stay in the line and take questions as long as you have them for.
Thank you, Todd. Much appreciated. Everyone, just so you're aware, we work with accredited investors like many of you on the call, ranging from small check sizes of 50 to 100,000 to well into the millions. We work with registered investment advisory firms, wealth advisors, family offices, and private equity firms. We are purely a private cannabis investment-focused holding company. Now we're going to move to the feedback survey. So if you could, just take a quick minute, and we are going to select one lucky winner to take home an Amazon $100 gift card that fills out our survey. It gives you an opportunity to, number one, give us feedback. We always want to improve these presentations. And number two, we absolutely would love to engage with anybody out there that would like to talk to us about the exciting world of cannabis investing. You just go to menti.com and then use the code 131916, and it literally takes 30 seconds to fill out the survey. So Much appreciated. Again, that's mentee code 131916, and you just go to mentee.com. And there is the survey there. So as you can see, it's just a handful of simple questions. Let us know if the value can be improved, or let us know if you think it's excellent, and feel free to answer any of those questions to engage with us. Todd or myself would be happy to talk to you directly at any point in time. Tony's going to talk about this slide, and then we're going to move right into the Q&A portion.
Thank you, Michael and Todd. I hope that was informative for everybody. If you are interested, if you're currently not an Entrust client or you are an Entrust client and you're interested in creating an IRA to make an alternative investment purchase, we have a very simple, streamlined online process. You can just go to our website, theentrustgroup.com, and you can open an account online. It should take about 10 minutes. I feel like I have a little static. Bear with me. Once your account is open, there are 3 ways to fund your account. That can be done via transfer, rollover, or contribution. Give me a second. I'm echoing. I'll try to get off of it.
Tony, you sound fine on our end.
You sound good?
Yeah. I mean, everything sounds clear on our end.
Perfect. So once your account is funded, a transfer will move money from one IRA to another. A rollover is taking money out of a qualified retirement plan from a prior employer and rolled over into a new IRA, or you can make a contribution. Once your account is funded, Entrust will work with you to purchase your asset at your direction. Now it's time we can open up for Q&A.
Great. I see that there's some questions that have populated through. So, second. And then, Tony, I'm trying to remember, do we open this up for people to be able to ask questions verbally, or is it only through the electronic questions?
It's going to be through the electronic questions at the moment.
Got it. Okay.
All right, so I'll read off the questions as they came in. The ones that we can answer, we can answer. If not, I will keep both Michael's and my contact information available. If any, please feel free to keep one of them. First question, this can be for Michael and Todd. Do you feel the CBD hemp will be bigger than the THC business?
So we view the THC slash CBD play as better right now. CBD is going to undergo FDA regulation at some point, and it's a large, scattered kind of Wild West market right now. And picking out the winners and trying to predict what the FDA regulations are going to be, we feel it's kind of a crapshoot right now. So you do get CBD through regular cannabis, and it's not a choice of one or the other. And you can get CBD through low THC cannabis. There are specialty blends that accomplish both of that. And we know the regulations regarding THC and cannabis. So while the CBD space has some value, we view that there's probably going to be a pretty large shakeout there once the FDA decides to regulate it, or there are some kind of federal provisions on it. So we are avoiding that space right now. It's really just at this point mostly a branding kind of play where you're looking to create the hip CBD brand that people want to go buy. Next question.
Sure. The next question is from Arun. Arun, that would have to be emailed over to Michael directly, so please find his email address on the presentation. Actually, for both of your questions. Next question is from Mona. What is the typical investment amount for an individual? I can touch on this. This is based on, the investment directly, but for Cannapreneur, please reach out to Michael directly.
Yeah.
Next one from Alan. Only available to accredited investors. Again, this is specific.
Hello?
All right, Michael. What does the supply of cannabis in Massachusetts look like today? Is there?
So right now, Massachusetts is at a severe shortage. You cannot transport cannabis across state lines because it's still federally illegal. So if you are a retailer or distributor in a state, you have to buy from the locations in that state. And it's much faster and easier to set up a dispensary. You could have one up and running in 6 months versus a grow facility that can take 12 to 18 months and $20 million to start. So right now in Massachusetts, you can grow cannabis if you're an average to mediocre cultivator for about $1,000 a pound, and as of today, that's retailing for $4,000 a pound. And it wholesales for $4,000 a pound, and it retails for about $7,200 a pound in the dispensary locations. So Massachusetts is under a shortage of cannabis. A lot of that's because, again, you have 33 dispensaries serving about 40 million people in Massachusetts and the surrounding states.
Great, thank you, Michael. Does anybody have any further questions that you would like to type in? Okay, well, that seems like that's about it. We want to thank everybody for attending today's webinar. Please find both of our contact information. Should you have any further questions, feel free to reach out at your convenience. Thank you, everybody.
Thank you.